Everybody, make sure you subscribe so you can chat with everybody on the stream. Good morning, good morning, good morning. Morning, everybody. Hey, how's it going? And let's do a poll. Let's do a poll. And no change. Cut. See what everybody thinks. This is tomorrow. Just a reminder. Tomorrow, FOMC, 2 p.m. And I guess be careful out there. We might have some volatility. And happy St. Patrick's, everybody. I got my green on. And welcome. Welcome back. Got my grape purple ultraviolet monster this morning. And this is one of the only financial shows I have ever found that, because I built it, that runs on taurine, caffeine, and brings tears to Wall Street analysts who got it wrong yet again. So I want you to imagine something for me. Imagine you're a Wall Street macro strategist. You wear your Patagonia vest indoors. You use words like secular 3 times before breakfast. And for the last 2 years, you've been selling very, very specific, very comforting fairy tale. It's called the nearshoring miracle. As the story goes, all the supply chains are coming back to the United States, moving out of China, bringing them right here. We're talking about right in the United States, right in Mexico, and boom, a golden age of North American manufacturing has been born. It's all beautiful. We all hold hands. We sing Kumbaya. We ride a wave of endless trucks crossing the borders into the sunset. And, well, wake up, sweetheart, because the data just dropped and that fairy tale is looking a bit more like a horror movie right now. So here's what's going on. Here's why this matters to our wallets and our portfolios. Because right now, today, the North American freight market is actually in a death spiral. Mexico's heavy truck production just dropped 50%. 50% in 1 month. The exact same time, nearly 4,000 American supply chain workers, think about it, 4,000 American supply chain workers got handed pink slips. This isn't like a blip in this situation. This is a structural 3-year-long freight recession that's starting to crush logistics companies, bankrupting auto parts makers, freezing capital expenditures. And if you're holding on to some broad-based transportation ETFs, if you're invested in logistics brokers, or if you invested into this nearshoring hype without looking at the underlying data, your portfolio is laying on the train tracks right now, and the freight train is about to pass by. But because we're monsters of the markets, we don't panic, we profit. Today, I'm going to give you kind of a playbook for this freight recession, a scorecard maybe. Who's bleeding? Who's surviving? Exactly how in the world do we trade the wreckage here? So let's look at the crime scene. What's going on, right? Yesterday, well, I guess it was 2 days back, really. Mexico's National Institute of Statistics and Geography, mouthful of a name, right? Thought the United States was the government, right? Government. Anyway, so we'll just call them the bearer of bad news in this situation. They released their February numbers for heavy vehicle production, and the entire country of Mexico built just under 7,000 units. Big, heavy trucks. Now, sounds like a lot of big, heavy trucks, right? Until you realize that February of last year, year ago, they built 14,000. Production is down 49.1% year over year. Exports, they're down 32%. Domestic sales, down 40%. I mean, this isn't just a bad month. According to the Mexican Association of Auto Distributors, another mouthful, This marks 14 consecutive months of decline. 14! Over a year. If your relationship has been declining for 14 months, you don't call it a rough patch. You probably call it a divorce lawyer. So, why is this happening right now? Because 91% of Mexico's truck exports go to one place and one place only. Anybody got a guess? Anybody? It's the good old Uncle Sam, United States. And the United States freight market right now is a little bit curled up in a fetal position. We're seeing a wave of layoffs across the American supply chain that would make the Grim Reaper wince. I mean, in just the last few weeks, we've tracked nearly 4,000 job cuts across 17 different facilities in 9 different states. SK Battery America just laid off almost 1,000 workers from their EV battery plant in Georgia. That's 37% of the workforce. Poof, gone. Because the EV transition is looking a little less like a transition and more like a long-tail multi-car pileup. First Brands Group, a major auto parts manufacturer, poof, filed for Chapter 11 bankruptcy, cut 900 jobs in Texas and Tennessee. And it's not just manufacturing. The people moving stuff, Parsec LLC, an intermodal logistics operator, they're shutting down rail terminals in Ohio, Florida, South Carolina, because they lost their contracts. Third-party logistics providers like GXO, maybe you've seen their trucks, Geoids, are slashing jobs because their clients are shutting down operations. Even FedEx is consolidating their network. I was a victim to this last fall. They're combining their FedEx Home and FedEx Regular Express network together, consolidating. Amazon leaving UPS in the dust. I mean, there's a lot of stuff going on. When you consolidate your network, it means you don't have enough boxes to fill the trucks. When you don't have enough boxes to fill the trucks, you don't buy new trucks. When you don't buy new trucks, Mexican factories take a 50% haircut on production. I mean, this is kind of a perfect, miserable cycle of economic contraction. The truth is being told in the numbers. And this might be one of the wildest parts in the whole story. The cherry on top of the garbage sundae here, down in Mexico, they're dealing with what you might call used truck distortion. For every 100 new heavy vehicles sold in Mexico right now, 64 used trucks come in the country from the United States. Think about this for just a minute. American trucking companies are going belly up, liquidating their fleets and dumping their exhausted, high-mileage rigs right across the border at fire sale prices, completely undercutting the market for new vehicles. So what's the framework here? How do you make a buck, right? How do we wrap our minds around this? Well, Wall Street, they want you to believe that the freight market is just recalibrating. They use words like bottoming out. But the fixed gross investment indicator in Mexico, specifically for machinery and equipment, has been negative for over a year. That's CapEx on a strike. As in, maybe not coming back for a while. Companies are kind of terrified, especially manufacturing companies. They're looking at tariff volatility. They're looking at fuel prices spiking because of the Middle East. And they're saying, you know what? Let's try to keep some old trucks running a little bit longer. And this brings us to the Freight Recession Scorecard I mentioned earlier. How do we make money when the wheels are falling off the rig? Well, first, let's talk about direct losers. The companies bleeding cash right now. You look at the truck manufacturers. PACCAR, P-A-C-C-A-R, their ticker symbol, PCAR. It's Papa, Charlie, Alpha, Romeo. They're the parent company of Kenworth. If you've ever heard of a Kenworth truck, they have a massive presence in Mexico. The stock is hovering right around $115 right now. That's down from its 52-week high. You also have logistics brokers companies like C.H. Robinson, ticker CHRW. That's Charlie Hotel Romeo Whiskey. And now their CEO recently came out and said, well, we're the disruptor, not the disrupted, because they're leaning heavy into AI improvements, trying to improve their margins. That's a great idea. AI is cool and all, but AI can't magically create freight volume out of thin air to fill the trucks. If there's nothing moving, if there's nothing to ship, your fancy algorithm optimizing empty trucks. And then you have the broad exposure, the Spider S&P Transportation ETF. That ticker is XTN, X-Ray Tango November. It's trading around $88. And if you believe this data, if you believe that 14 months of decline and 4,000 layoffs is just getting started, the pain might continue. You might look at some defensive option strategies out there. You look at the things that might be good buys. When XTN gets around 55 or PCAR gets down in the 90s, low 90s, you might be able to sell some puts and collect some dividend or collect some premium, and might get a massive discount if we actually do bottom here. Now, if you think this is a longer term cycle, you may want to look for further down. As for degenerate gamblers in the back, you could do bear put spreads on XTN. And, don't let people sell you on this nearshoring fairy tale right now without checking out actual numbers. The factories, they're slowing down. The workers, they're going home. The freight recession is still here. It's still hungry. It's still churning up. And we're here to looking at opportunities. So stay cynical, my monster friends. We'll look at some charts, try to find some other ways to make money today. Be careful out there. This is yet another cog in the wheel, indicating that we may have further downside to go before we find the bottom. So jumping over here, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining. It's not a recommendation to be buying or selling any financial instrument. If you need financial advice, there's people you can hire for that, but you should be careful. 90% of traders, as the statistic I hear commonly, lose money when trading. And that includes stocks, options, bonds, forex, futures, cryptos, treasuries, maybe even betting markets. Be careful out there. You might lose money. I repeat that over and over because it seems that a lot of people don't hear me. It would seem that people don't hear me, that this is a risky game. This is interesting right here. Coming up tomorrow. Today, we don't really have much going on. Tomorrow, 8:30, we got PPI. Usually attached to PPI is retail sales, but not in there. 2 p.m., the big show. Fed funds. Let's see how everybody voted. No change. Seems to be the popular. 73 voters out of like 130 people. Come on, everybody. 8% say raise, 4% say cut. Let's see where the minority is there. And pop over to Poly Market. See what we got cooking. Let's see. I don't even see it. Usually it's right up on top. On the most popular stuff. Let's see. Fed decision in March. No change, 99%. So 88% on here. You guys are a little more optimistic on some Fed malfeasance. 99% here. Now, what's interesting, you pop over here, Dun, 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 dun. Look at this. What is this, you say? DGS2 is the blue. That is the 2-year constant maturity rate. This is the market rate. If you didn't know, if you thought the Fed set the rate, and they're the kings, guess what? The 2-year constant maturity rate sets the rates. And the Fed chases them with their policy decisions. This right here is about to break out of the top of the Fed's range. Their range currently 3.5 to 3.75 with a roughly midpoint around 3.64. And the 2-year constant maturity rate is climbing up above their zone. Now, look back a ways. We've seen little blips before. Temporary, and then fall off a cliff. So this is a warning sign based on history. Looking back further, they could just hold rates a little bit and try to jawbone it back down. Do see temporary spikes in the Treasury rate without the Fed taking action. These are different Fed chairs. So right now, nothing too crazy, but if this starts running, the Fed may have to start raising rates. And funny enough, I speculated all this back in 2022. Before we kind of held sideways for a while, I speculated that we might have to raise rates. So if you're new here, I've been talking about this for a couple years. Can it be 4 years? That we might actually have to raise rates before some chaos happens. And chaos being where they cut rates to zero to try to stimulate everything back to, back to working again. Unfreeze the cogs. Back to zero interest rates. Zero, ZERP, if you will. Zero interest rate policy. It's where your bank pays you no interest on the money you have on deposit. It's an interesting warning. So if this is one to watch. If it starts getting out of control, certainly if we start breaking about 4, maybe even 5, with that 2-year constant maturity rate. Now, what drives that? You might be like, well, what would cause that market rate to increase? Counter to what the whole narrative that's been sown since the war started. People are talking about a flight to safety. Move into the dollar and into treasuries. Now, if you have money moving into treasuries work backwards, right? Treasury rates don't go up when money's flowing into treasuries. It's completely backwards. When you have a treasury auction, it's difficult. Most people think, you have an auction prices go up, right? When there's more people playing, more people buying, auction prices go up. But for the treasury, when you have more people buying, the treasury rate goes down. We have more people participating in the treasury auction. This is not that right now. This is people saying they're risk off for the United States. We don't want treasury debt. That's causing a spike. That's counter to the narrative that's being sown in the mainstream media. Interesting. Interesting is what I would say. Anyway, jumping over, looking at the S&P, getting another bounce day. I don't figure we're going to do a whole heck of a lot except drift higher into the FOMC tomorrow. And then the chance of that being the excuse to sell off to a lower low is elevated right now. Primarily because both the S&P and the NASDAQ would look best with another dip down lower. Kind of clean up the chart a little bit. Flush out the correction. Yeah, this one move down, move up. And this sloppy stuff over here would look best with one swift kick in the pants. Then we could go higher. You may be like, well, I just don't see that happening, but be careful. FOMC could be the excuse, not necessarily like the reason. So be careful. ES overnight, definitely putting up pressure here. And we have this longer term downtrend of highs. It's been going since last month, excuse me. That's been cooking since last month. And if we zoom out just a little bit more, we've got this bigger downtrend of highs that's been cooking since back here in January. Kind of been cooking all year. So if we manage to get through this and stick the pop, next resistance up is right around here. It's about 120-ish points higher, but that can lead to 1, 2, 3, right back down. Trend is lower. Absolutely beautiful correction and continuation lower. So be careful out there. I'm not saying that has to happen. This is just the warning sign. When the market gives you warning signs, I tend to pay attention. And that warning sign right there points us to a resistance right in this zone, which is right holding the downtrend. Right on there, holding the downtrend. And if you've not seen, I call it A, absolutely, B, beautiful, C, correction type thing. Three-wave moves are corrective. We kind of have one here, 1, 2, 3, 1, 2, 3. That could be a 1, 2, and a 3 down. And a big complex corrective set of threes. So we may see this flush on down. Now I'm hoping that we get this week. VIX OPEX, the last day to trade VIX for the main March expiration is today. The VIXpiration is what some people call it. Maybe like, wait, I thought options expired on Friday. But wait, the main monthly VIX expires on the 18th. That's tomorrow with an AM, which means the last day to trade is today. Now we have weeklies tomorrow, next week, next Wednesday, next, week after that. Those all expire the day before. Like the last day to trade the day before. They expire instantly at the open at a price that's not the open price. It's very, if you want to read something that really bends your mind, go try to figure out what the expiration price is on these AM expiring index options. There's a whole variety of them, in fact. And this week is piled up. Right here. We have VIX last day to trade today. For those options that expire tomorrow, in front of the FOMC later the afternoon. VIX options expiration right there. Last day to trade AM settled index options is Thursday. And then they expire. The AM ones, this is where you got to be careful if you're playing something like S&P. And you're like, wait, there's 2 options expirations on Friday. The AM ones, the last day to trade those is Thursday. And they expire at the open on Friday. But these are the normal PM expiration. As in, they close when the market closes. They expire when the market closes. Right there. So be careful. There's some tricks when you're playing index options. Tricks to the game. Always tricks to the game, right? Everybody's trying to make some of your money, some of their money, especially market makers. So this week is an interesting piled up week. It's particularly interesting to me because usually, historically, you see a volatility spike. And right now, you check out the VIX. Was that it? Was this the peak? And we're about to drop it back down? Or is this a prelude for a higher spike? Was this the spike we were looking for? Or are we about to make another one little spike higher before we call it quits here? Can't say for sure. Yeah, we don't always get a spike in March, but historically we do. And see, we didn't even, like, back in 22, we hit this one right up here around 37. We didn't quite get there this year. And 2020, of course, was the biggest spike. You know, last year we had a pretty crazy spike. Coming out of March, we had this prelude here. And could we repeat this again this year? We had this early March spike, kind of preliminary, called it all clear, and then we got the big spike on Liberation Days, freak out. Could deja vu it again. Like, we got this little move up, pull back, shoot up. Got this move up, pull back, shoot up. That'd be weird. Potential sits out there. So be careful. Always be careful. Market, one thing it's good at, taking the most amount of money from the most number of people. Right now, people are pretty bearish going into this OPEX right now. How do I know? Because I've got this thing called Bull Flow. Links in the description if you want to grab this. Bullflow.io. We have a nice gamma bubble forming today. But check this out. Look at this big level down here. $1.1 billion at 660. We're hanging out at 674. Another big level, 300 million. Another big level, almost 400 million. Another big level, 300 million. Another level, 150 million. Look how far down we are. 640. Man. Now contrast that though. This is interesting. That's SPY. A lot of retailers play SPY. A lot of big money plays SPX. And for whatever reason, Bullflow doesn't have the daily expirations on here. But we come rolling in here and look at the big expiration. Look at this, 67, 800 million. 6720, 200 million, 200 million. Roll down in here, 100 million, 850 million, down at 6550. Down here, 6625, 400 million. Down at 66. Wait, this one's not the blue one. Another 870 million. But that was not the big one like it is on SPY. Interesting. It's up here. 7,000. So the SPX is actually got options players playing a little more bullish. Look at that, 800 million, 69.50. It just jumped a little bit. Probably come back in a minute. So it's interesting that the SPX options playing a little more bullish and SPY playing a little more bearish. I find it interesting. Anyway, we'll come back to gamma charts toward the end. I'll try to make some predictions on where we're going, like I always do on the wrap. If you didn't know, I pull up SPY, jump down here, and try to make a prediction where we might hang out for the day. Ooh, look at that. Yeah, right around that big level yesterday. Today, coming up for this one. And also look at QQQ. Try to make some predictions. Look at that. Beautiful. Man, that was bang on yesterday. Oops, wrong button. All right. Working on down the list. Russell appears to be holding that roadmap line so far. If we can get on through, moving back up, we're going to have to get back above this trend line here. It's not a big, heavy, strong trend line with only 2 points, but is a trend line nonetheless. If we can get back, shooting back up through it, sets us up 3,100 on Russell. It's right up here, this fib line. Now, if you want to see some intermediate resistance, take this high back here. Take this low right here. Highest high, lowest low. There's a big, heavy blue line coming across here that I drew, and it just happens to be the 618. So if we get through that, and then through that downtrend of highs, that little zone of resistance, probably setting up for 3,100. So if you want to watch a trigger area, a trigger zone, that's the zone to watch right there. Right in here. Right around that 2650. We start getting through it. Game on for going on up to 3,100. Now you might be like, how the fudge do I trade Russell? This one, IWM. And if you want to know the level, go from the high down to the low. Got to get through like 260, 261. And that sets us up to potentially come all the way up here to like 305. Not quite divided by 10 on the Russell chart, but close. Oil. Now here's another interesting game here. Oil made an initial drop right here. Now, if this was all of the spike, if that's the top, there's the retrace, 618. We might chop in here a little bit and then drop all the way back down to the roadmap line. Possible. Potential. This is just a bubble pattern. We did this part. We've done this part. Working on this part. We may chop in here a little bit more. But then when we break down, it's all over but the crying. So be careful jumping after the long oil narrative. Even if the action in Iran goes on longer than predictions say, we might have already hit peak euphoria. We might be in complacency. Just need it to cool off for the next rally. But really, we've already hit the peak. Why do I pull this up? This is very classic price action. This happens over and over and over. This is like how the crowd of the market reacts right here. We go into peak euphoria. The thrill. Just got to tell everybody to buy more oil. Just need to cool it off. It got a little too hot the first time. We just need to cool off a little bit. Then we can go higher again. So we could be sitting in this consolidation here before we drop it back. Tons of examples of this happening over and over and over in the markets. In fact, here's another one. Potential. Went a little super excited here. First initial drop back. Getting a little bit of that chop. And we can take this right back down into the 4,000 area pretty easily. Zooming up, looking a little closer. We have the initial drop over here in January, February. We have a 3-wave retrace to a pretty perfect ABC proportion. Another first move down, smaller. Retrace, smaller. First move down to that. Get another smaller potential retrace. This is nesting up the potential drop here. If we rally the next day or 3, find resistance right here. We're setting up for more of a swift drop. Target area down in here, around 45, 4,600. May get another bounce, and then a final flush down to around 4,000. Wouldn't surprise me at all. And this could go deeper. It could, doesn't have to hold in here at 4,500. It could. The thing about gold, when the panic selling sets in, the panic gets real, as you can see. Bitcoin coming up into the resistance. So that may have been the whole first move up right there. May get a retrace. Something to watch out for. And then this could push it on up into that zone. Could be running on an accelerated path to this C wave. So this A may have been complete right over here. This B may have been complete right here. And we're actually working on this C right over here. And so that would be the first move up, the retrace, the next move up, the retrace, and the final move up right up in there. And then we embark on the next leg, which, if you're new here, I was pointing down to 30 to 50K on the bottom. A lower low than this low right here is what we need to finish up Bitcoin. Ethereum, same kind of situation. Probably in a crypto winter. Dollar. This is something to watch, everybody. If we come back, retest this roadmap line, get a nice swift bounce, come up through the 618. Very quickly, we can see this popping up here, going above 102, starts the squeeze. Now, this wasn't a big retailer trade. This was a big money trade. Big money hedge fund desk trade. Last year, short the dollar was the big trade of the year. Big money was in this trade. Made a bottom right here. This potentially is the bottom of this. They keep selling this narrative, though, that we're going back. The dollar's trash. We're going back lower. They believe their own crap. But the warning signs are in here that we might actually rip this higher. If it gets out of control, gets above 102, we're going to start a short squeeze in the dollar, stopping out this trade over here. And we might not stop until 120, possibly 130, maybe even 140. And this all parallels somebody just dropped something big outside. This all parallels crazy stuff that happened back here. Yes, dollar dropping narrative and ripping. Doesn't necessarily just happen this year, though, so be careful. Let's could be more drawn out. Time is the hardest part of this all to predict, but we get this retrace and hold in here. Now, if this doesn't hold, we'll look for a deeper 618 to hold that high, or that low, that high. 618 right in here. You need to see it. You're like, I don't get it, JT. Grab the 2-point tool. That low, that high. You see it right here. So if we don't hold here, come on down. That's the support zone. And then we can go higher. So that's kind of the two zones I'm watching right here at the roadmap line, right around 99. And then down here around 97. NKD, this is an indicator of global liquidity. And right now, this gives me a little bit of caution on this, on the play for dropping tomorrow, because this looks like this initial drop right here, initial recovery, it's looking like an A, B, and the C would pop up right in here before we get the flush, the next flush. Now the proportions here, you got this low, you got this high. Look at that beautiful bounce right off of this 618 fib line right there. That extension puts us right up in here for the resistance with the 3-point tool. Go with the low, go with the high, go with the low. And there's the resistance zone right there. If we're going to pop it up right around that 57,400 area, 57,400. And then we could embark on this deeper drop. Why would I pay attention to the Nike, which is the Japanese stock market? For global liquidity, money tends to get borrowed in yen, deployed into risk-on assets like the S&P 500, the NASDAQ, gold, Bitcoin. And if money's going to flow out of that, we usually see risk-on markets get hit alongside it. And you can see this back here. Look what happened Liberation Day. This was already on the chart. We already knew this was coming because we had the prelude in 2024 in August. It was all in the news. The yen carry trade blowing out, and it made the U.S. markets chaotic. Then we kind of all clear, and then it started rolling again. I was warning as we broke out of this box right here. We had big problems cooking, and then we got the Liberation Day pullback. You can say it was because of tariffs. I think it was more because global liquidity hiccups. Then we had this epic rally higher. But the U.S. markets didn't do this. Now, part of this was the new Japanese prime minister and printing money and blah, blah, blah. But that's more money flowing out there to go get into risk on assets. We've not seen that taking everything higher yet. So that's why I think we have one little pullback here and then we're going higher. Apple holding on to this support zone. We can go higher. 295 is the target. If we break down below this support right here, 200 is the target. Amazon, back the highs is the target, up here around 260. Google, down here around 280 is the target. Need to finish up the downside. Meta, as long as we can hold on to this uptrend, kind of poke through the more aggressive one, but we're still on the path. If the path takes us up here to 1100, 1300. We can just keep on the path, keep grinding higher. Microsoft, I got a big question mark right now. That was a lower high. And we haven't really done anything yet. We haven't made a lower low. We're not breaking higher high. So this is kind of a question mark. Is this the bottom that we made right here? Is that it? or we're going to have to make a lower low to hold support, or we're going to have to make a bigger lower low if we break on down. Maybe lower than this low we made right back here on Liberation Day. Could be down in the low 300s, which is a heck of a trip for Microsoft, going from up here at almost, getting close to 600 all the way back down to 300. 50% haircut. NVIDIA, I keep warning, the longer this churns right here on this roadmap line, the more I'm feeling a flush right down here at 150. Retest this breakout. Sound like a broken record, but then we're coming back down to retest this breakout of these highs right back over here. Right around 150. 150, 152. We made these highs right back here in 2024, coming into 2025. We blasted right through on the rip summer last year in 2025. Made our peak, initial pullback. You notice this choppiness. Anybody recognize the pattern? Except I expect it to hold here, not going down. But if it did go on down, 120 is where I would expect it to start finding some support. Remember, every dollar this moves, every dollar, higher and lower, is 25 or 24 point whatever billion dollars. 24 point, I don't think it's $24.1 billion, rounded off, $25 billion coming into or out of the market. Out of NVIDIA specifically. You may be like, well, it doesn't make any sense. It's right here at 24.3. $24.3 billion. How many shares are there? 24.3 billion shares. When a share goes up $1, that's $24.3 billion of value. 24.3 billion. That's more than, think about that. That's the $1 here is more than the value of a lot of companies out there. And that's where this $4.4 trillion valuation comes from. It's wild, right? Wow, when you think about it. There's whole companies. Now, $1 billion right there into or out of their company. Their whole market capitalization is $45 billion. $45 billion. So like $2 on NVIDIA buys all of Chipotle. Crazy to think about. Tesla. Funny enough, on Jimmy Fallon, they called it Tesla last night. Anyway, still holding this downtrend. We can break above it. 500, 550. Oops, 550. Those are the near-term targets. If we don't, 370. Still down here as the potential dip down tested. We are under the roadmap line, so downside 370 is kind of what I expect to see. Dip, then potential. And we might hold in this zone till out here till earnings. Quite possibly. Netflix glanced off of the roadmap line, retrace a little bit. Potential to come on down here. If you don't have the roadmap line, link is in the right underneath me. Go to the channel homepage, watch the video. Pinned in there. I give you the code for free for it. And it works as a support resistance line. I commonly look for trades that bounce off of it, both higher and lower. If this were to dip below here, I'd look for the downside. Commonly, though, I just look for the bullish ones because for the last 100 years, the market's averaged bullish. And why bet against the market? It just doesn't put things in your favor. Now I go pull gainers and decliners. Things moving up. $2 more in the pre-market. This one's moving up 86 bucks. That's 10% on something that doesn't typically move big like that. Watch out. This is getting a little bit far away from the roadmap line. A little bit frothy. Definitely see a bigger pullback. Same on MU. A little bit frothy. Haven't really been back to the roadmap line since back here. Probably due for a bigger correction. Same on SanDisk. Same on Western Digital. Same on a lot of AI related stuff. CTRN. Now crazy can keep being crazy. As we have right here. I mean, look, if we're doing this, think about it. We're hanging out, chopping in this 24K zone here. 24K zone right in here. And think about it. We hit 25, pull back 24, chopping in here. What if we go on this epic run and go from 25 to 40? And then do the bubble pattern chop and take it all the way down. That would be similar to what happened in the .com bubble. It's interesting how parallel we're doing right now. There could be an epic pop. Run this thing up to like 40,000 before we flush it all the way back down. So that could be cooking. That sits in my mind. Maybe we just push everything up even crazier. Crazy keeps being crazier. ETN is chopping in here. Didn't hit the 413 target. Got close, but didn't do it. That may have come back to the roadmap line to come on up 426, maybe even 460. CHRW, watch for this to do another flush. We may be hunting this 500 level before we push on down. EWY, same situation. We may be hunting this 140 level before we push on down. First move down, 3-wave retrace. Next move down, right in here. Oklo. Man, for all the people that were bullish on that thing, this is what I'm talking about. Like, once it hits the peak, the corrections are vicious. And this could come on down. Lemonade. Coming back up pretty good. If we can get back above the 75 area, looking for 110, 120. USO. Chopping around in here. You know, you could probably add a put spread out. Good long ways. See. I'm sure they're pricing this in to come back to earth, but let's see what we got. We go out a bit further than most people might think. Let's see if I can find anything. Coming back to like 75. And let's see. Yeah, so if you jumped on a 20 wide spread, buy 100, sell at 80, cost you $7 with $20 upside potential. So that'd be almost a 3-to-1. Like, that seems a little rich still. Just come on down here just a little bit more. Maybe you grab a 90, 75. It's 15 wide. That's closer to 3-to-1 payout. Maybe a 200% gain, basically, at the max, if we dropped all the way back down to 75. And that's out to October. Be an interesting play. I don't know if I'll do it. ALGT. I might just buy some SCO. Get the leverage. All the leverage without all the headache of picking time. Just pick up some shares of this when you think we're peaked out. And we get the drop, especially if it happens fast. Double, triple, quadruple your money pretty quickly. ALGT. 5 p.m. today, I'm doing a request show. So if you're sitting here like, oh, I wish you'd just look at my chart. Well, 5 o'clock today, 5 o'clock Eastern. Come hang out. Do at least an hour of requests. I call it 30 minutes of awesome because usually I do some market analysis. Then I do at least 30 minutes of requests. Then I jump into an Ask Me Anything for channel members and keep going until all clear. So, let's see, you say the oil's trading higher than the digital price, but you have different oil markets. You got Brent, you got West Texas, different prices. You got USO, different price. So you got different stuff. You got heating oil, it's a distillate. You've got gasoline, it's a distillate. And you've got natural gas. That seems relatively unaffected. Probably coming back down. I think that peaked out. Peaked crazy during the cold and then ripped it right back down. Coming into the historic low for natural gas. Usually we bottom out somewhere around end of March, beginning of April. And seasonality wise, then we rip it on higher. And this is the seasonality chart. So right now we're pricing in a low around into April. The next high somewhere around December. The next low somewhere around April. The next high somewhere around December. The next low somewhere around April. You're going to get the seasonality of natural gas. If you didn't know this existed, this is the futures that exist out there on natural gas and the way they're priced. Get the same sort of thing on gasoline. That's your winter summer blend switch right there. So market's already pricing in this. It doesn't hold. We come back down to like $2 on the wholesale price. Heating oil, diesel fuel, already pricing in. We come back down to about a 240 base. That's why it makes some of these hard to make money on, because the market's already priced in. It's coming back down. CRDO, looking for that to pop back up through the 618, 240 on the upside. And when we do, UAL, interesting. We may go deeper here before we make the next pop. SCI, already hitting targets. NMM, didn't quite make it to the roadmap line yet. But on the bigger picture chart, we might still be ripping here. Tag that, retraced, 81, 108, next upsets. DAL still hadn't gotten up to the bigger targets. Look at this to pop on up to the 120 area. VLO, be careful here. These can pull back violently. ARM, still have more downside to go. TAT, that's just been grinding. Look at that, grinding higher. On the daily, we get these small pullbacks, so I would expect another pullback after that ramp higher there. You better. No bottom in sight yet. Potential bounce. Got to get through the roadmap line. Got to get through the 618 to indicate we're going on up to 107. LEU probably has more downside. Amphenol. Need to get through the 150 to go to 170. FANG, Diamondback Energy. Watch for another retrace. We could just pop on out, but unlikely. PPLT. Still wanted to see this go just a little bit lower before we get the bounce. Akamai. Careful. That may take another spill down. Things were declining. Lumentum needs to come back to the roadmap line. Coherent needs to come back to the roadmap line. NBIS kicked off the target at 155. CIEN needs to come back to the roadmap line. A lot of that going on. Owens Cornware needs to come back to the roadmap line. Honeywell looks played out, but we could hold this breakout and go on up to 257 here. Yeah, so that looks like we're going to take another chop. Man, this has been really choppy. So we're going to keep on the chopping plan here. And TME, and no bottom in sight for 10 cents music. All right, let's look at SPY. I don't have any setups today. Out of 4,000 tickers, nothing was set up for potential entry today. Crazy enough. Let's take a look at what we got cooking here in SPY. Move this over. Move this over. Move this over. Pull up the gamma charts. Take a look at a good look at what you got cooking. Left it on SPX, so let's type in SPY. Pull up the heat map for today's OPEX. See what we got cooking here. A nice little bubble formed. Do have that big level down here at 660. We may take a trip down there. It's entirely possible. Pull this over so it's not behind my head. And looks like we have... So if we're in the green, the market makers are trading opposite. Like if the price goes higher, market makers are selling. If the price drops down, market makers are buying. But if we get in the red, they start trading with us. You've got these big levels down here. So these are starting to shape up as a pathway down to this bigger level. Be cautious on that if we start breaking out of the bottom of the box here. So I'm going to set the box roughly 668 to 678. 668 was right where we were yesterday. 678, a little bit higher. There. And as far as the levels where we might end up, that's how I do this. Look at where the kind of, you have to visually kind of sum up like where's the midpoint of all the purple. I'm thinking kind of like here. Where's the midpoint of all the yellow? You know, it's kind of like right in here. And where do those two kind of balance each other out and screw everybody? Somewhere right around 669. So we could see, and that's right where it was yesterday. Could see a return back into that 669 area. Now I do have the big level marked out here, that $1 billion level out to the main monthly expiration on Friday. So right now, and a secondary kind of balance point would be up at 676. So why would I say that 676? Like if you look at this big purple and you really wanted to screw put holders, but you didn't mind taking a few call buyers higher, you can pull this up in here, right around there. Really pick up some more put buyers without too many call buyers. Now, look at where the put buyers are sitting. They're mostly sitting on this Friday expiration here, not on today's 17th expiration. So, and for whatever reason, that 16th just popped back on there. We need better filtering on that. Those are expired and gone. Now, Qs. I'm just zooming out with the scroll wheel. A little bit different situation because there's not many players today. The big players all at the end of the week. And we've seen this lackluster participation in Qs for the last almost 2 months now. So look at the heat map. This is where I gather the bubble zone from. Got a fair bubble forming today. And I'm not going to leave out that 600 level. And we're going to go up to 611 on the upside today. 611. And we're going to keep picking up that 600. Is there anything lower than that? Not really. So 600 on the downside. And there is a big level down at 590. Why is this big line here out to the 20th? Because while it's not the biggest level There is a 590 hanging out down here on Friday for 400 million, which is not all that much smaller than this 400 million. And pulling over the levels, kind of matching this up. It'll go right around 602. So we may see some downside pressure back down to the roadmap line today. That'd be kind of where I expect us to hang out and pin today. Kind of mess around here and pause into tomorrow's big FOMC event. Now, be careful tomorrow. We've got those big levels and they're stacked all the way down, so we can see a dropout on FOMC. That'd be the excuse, is the FOMC. Oh, they didn't cut rates like we thought. Whatever. I don't know. We'll see what happens. Remember, I'm live 5 o'clock. Come back, bring your requests. I'll be live with Jack at 11:30 for Market Masters. Links in the description. Have a great day, everybody.